Buddy. Okay, thank you to the CFN leaders, Gil, Dustin, Jordan, and Marshall, who founded us at the right time. We're so grateful for you guys. I'm gonna go over why we decided to niche down on whole life, and then Josh is gonna go over the details of what it is and how we do it. So 1 year ago, we officially started building a team with CFN. We had one team member, which is Casey. She's here. 1 year ago, we were barely learning how to run a business together. 1 year ago, we didn't know anything about the infinite banking concept. Fast forward to now, we have 18 agents, including remote and in the office. We now know our roles, our strengths and weaknesses. We love running our business together. We now have Josh, including other agents in the office who are infinite banking practitioners. That means there's out of 900,000 life and health insurance agents, there's only 300 infinite banking practitioners. And we have a few of those in our office. Now, why IBC? It helps us stand out and be different than most. We are here for a purpose. It's our way of revolutionizing the banking system, changing the way people think about money and banks. When we onboard new agents, we carefully go through several steps to ensure that they are the right fit and aligned with our mission, vision, and core values. And so, our mission is to empower business owners, households to achieve financial freedom through the infinite banking concept. When we are interviewing, we are also looking for these core values. Do they have courage? Are they willing? Do they seem to be honest? Do they want to make an infinite impact? Do they have love and peace? And our 10-year vision is to open up 1 million private family banks, create opportunities for 10,000 infinite banking practitioners, and create a 3.3 billion in revenue. With that being said, a huge mission, we're only getting started. Allow me to introduce my business partner, my fiance, and certified infinite banking practitioner, Josh.
Awesome. I'll start off saying that I totally did come from just IUL at our previous company, and when I first came here, I had to sit down with Marshall and Gil and Dustin. I was like, I need you to teach me more than this little box that I knew. And it took a month of every single day sitting on my balcony watching YouTube videos, and I read like 10 books that Marshall gave me and just digested all this information so I could really learn what was best for clients and what was best for the people that I was talking to. And I got on a call with Brent Gritton, who's the VP of sales from One America, and he pulled off of his bookshelf. I was asking him whole life IUL, and he just pulled off the book Becoming Your Own Banker by Nelson Nash, and I read it, and it changed everything for me. It changed the history of our family, like the Life Happens video. Like, I have $10 million of death benefit. Casey has $10 million of death benefit. Jared has $7 million of death benefit. Like, we have a lot of life insurance in our office, and we believe in it, and we're preaching it, and we really, it's more than just making money. And when you come to the business with that, when you talk to a client from that place and that point of view, it changes everything for how you're portraying what you do. And so I'm just gonna give a little intro. This is our exact client presentation. We just role played it this morning. So I'm just gonna role play. Can I be, role play with me, Jared?
Let's go.
Role play of how you actually do this and what I say to clients every single time. Now, we don't only sell whole life, right? We have 3 presentations. We have a term presentation that's separate from our whole life presentation. It's separate from our annuity presentation. And depending on what's best for the client, we just show them that one thing. Before, we were doing all of it in one presentation, and after training with Cardone University, Grant Cardone's team said it's like going into the car dealership. If someone comes in and says, I want a sports car, you don't have to also show them the minivan. Just go show them the sports car, or vice versa. So that's why we isolate the product that is best after doing fact finding. And so guys, start off, right before we get into this, I say, hey Jared, thanks for taking the time to connect today. Based on what we talked about, I'm gonna show you exactly how you can buy real estate using the infinite banking concept and take all of that money that you're giving out to outside banks and financiers and put it back into your pocket. Would you like me to kind of start more on the high level concept of what we do, or go right into the numbers?
This is all new to me. So something simple.
All right, cool. So my intention is in the next 5 to 10 minutes to give you enough value and service. I like the Eagles jersey. Enough value and service that you'll be able to make a decision today. Sound fair?
Good to
Awesome.
go.
So a little bit about our company. We run Infinite Capital Solutions. This is me, my fiance. Our entity's been open for the last 3 years. We have a little over 20 agents right now. We run an agency down here in Miami, and we're partnered with Creative Financial Network. This is Gil, Marshall, and Dustin right here. They've been in the business for over 100 years combined. They're our mentors in the business. And Gil, Marshall, and Dustin ran one of the top offices in MetLife. And before they got bought out by MassMutual, they left in 2015, created CFN. And now there's over 200 agents, and they're our broker dealer in the company. And so we're partnered with them. And we're also partnered with AmeriLife, which is a private equity firm, over 300,000 agents. And that's really the setup of how it is. So we have Infinite Capital, then we have 3 offices for CFN, and then AmeriLife has an insurance conglomerate of a bunch of different wealth companies, and we're part of that ecosphere. Now, what we do really is all about where you store your money, right? It's not necessarily about investments or life insurance. The concept is all about where you put your money. And so when you figure out where you want to put your money, you want that money to be liquid, meaning you want to be able to access it. You want to be able to be safe. So if the market goes up and down, you don't have to worry about somebody calling you, talking to you about how you lost their money. You have money, you want to get a good return, and you want to be able to control your taxes. Well, the first place that people store their money is in the banks. All right. Well, banks are liquid. If you need money, you can go to the bank. I just went to the bank today and got money. They told me I have 11 days, side note, to have to take the money out of my bank. But, you know, the money's kind of safe in the bank. It's safe up to $250,000, FDIC insured, but you're not going to really get a good return on your money, and you can't control your taxes. So most people say, hey, I want to get a better return. They put their money in the market. Stocks, bonds, mutual funds, 401ks, IRAs. The top part is for a brokerage account. It is liquid. If you need the money, you can take it out. Otherwise, retirement accounts are not liquid. You can take it out after, under 59.5, but you pay a 10% penalty. It's not really safe. You can lose money in the market, and you may get a good return. You may not. Over the course of time, you will get a better return, but you just don't want to be on the wrong side of that situation, but depending on when you retire, and you can't control your taxes. No matter what, you're paying capital gains tax on brokerage accounts, and you're paying ordinary income tax on retirement accounts when you take it out. So a lot of people then move their money into real estate. Real estate is not really liquid, but you can take equity out using a home equity line of credit. It is safe most of the time, but in 2008 type of situation, it's not really safe. You can't get a good return on your money, and you can't control your taxes. The only place that I've found that can get you a 4 out of 4 is life insurance, where it's liquid, safe, gives you a good return, and you can control your taxes. Right, the Rockefeller family has utilized this concept for over 6 generations to pass on tax-deferred accumulation of wealth, called the Rockefeller method. McDonald's in 1961, Ray Kroc actually borrowed cash from his life insurance policies to cover key salaries for employees when they bought out the McDonald's brothers. And fun fact, Ronald McDonald was actually a product of cash borrowed from a life insurance policy. Walt Disney was unable to get any more money at the bank in 1955, and he borrowed from his cash value life insurance policy to put the finishing touches on Disneyland. And JCPenney in 1929, during the Great Depression, borrowed cash from his life insurance policy so he could meet the payroll and day-to-day expenses of the store. And this little picture right here says $100 will buy this car, must have cash, lost it all on the stock market. And if you juxtapose the stock market today and in 1928, they look very similar. And so I don't want my clients coming to me with the same situation. So I want to make sure I protect my clients' money. These are some of our clients that have actually utilized this concept to grow their scale their business as well as protect their family. Isaac Williams runs some charter schools in San Antonio, Texas. Sean and Genevieve Sykes run multiple health and wellness companies in Palm Beach Gardens. And Alex and Penelope Kleppe. Alex makes my custom suits, but him and his wife and their 2 kids all have life insurance policies and are building up cash for the future. And so these are just some testimonials of our clients that have actually put this into action to show you that this stuff works. You know who this guy is right here?
Warren Buffett.
Yeah, that's Warren Buffett. Do you know his number one rule of money?
No idea.
Number one rule of money is never lose your money. Do you know what his number two rule of money is?
No idea.
It's read number one again.
Haha.
All right, so you want to make sure you never lose your money. And then I added on a third rule to his rules, which is to control your taxes. Right, you want to make sure you never lose your money and control your taxes. And it really comes down to this problem right here. And the main problem that we have in society is that we finance everything that we buy. Right? We either give money and interest to somebody else, or we give up interest that we could have earned otherwise. We pay financing for our autos, for our cars. We finance our homes through mortgages. We finance all our living expenses on credit cards. And we have a little bit left over at the end of savings. Right? At the end of last year, the annual average savings rate was only 3.8%, which means if you make 100 grand, you're only saving 3,800 bucks. Right? And so most people think, well, you know what? If I don't want to pay all this interest, I'll just pay cash. Well, if you don't pay any interest, that's cool, but you're also not gaining any interest and you deplete your cash. Right? If you have 100 grand in the bank and you go buy a car for 100 grand, you don't have any money left. All right? So instead of paying cash, most people are like, well, I don't want to do that. I'm just going to borrow the money and use OPM. You know what OPM stands for?
No, what does it mean?
It stands for other people's money, the best kind of money. Right? But then you're paying interest to somebody else and you go into debt. And most people don't know that this third option exists, which is to BYOB, which does not mean bring your own booze, but it means to become your own banker. And that way you pay cash into your banking system, you gain interest for yourself, and then you compound all of that interest on top of the cash and interest that you put into your system. Now this is all called the infinite banking concept. This guy right here, Nelson Nash, is the father of the infinite banking concept. Comes from this book, Becoming Your Own Banker. And he says you should plan as if you're going to live forever and live as if you're going to die tomorrow. Cool? Awesome. So before we get into the numbers here, this is really the macro level of the concept of the Wheel of Fortune. We put this together, right? And this is the first step, really, is to get a cash value life insurance policy. And then second step is to put cash into that policy. So you know how you said you have that 100 grand sitting in the bank? You would take that cash, put it into the policy. All right, now you'll borrow cash away against for the life insurance policy, so you can invest it in a cash flowing appreciating asset like real estate, like your business, or like yourself. Right? You should be your number one cash flowing appreciating asset. If you're not making money as a human being and you're not growing, well, what are you doing here? Right? So you've got to invest into yourself and then take those returns, put it back into the policy, and you can keep doing this over and over again. So you're taking cash, putting into a policy, borrowing against the policy, using those returns, putting it back in, and you're essentially replenishing this account and growing this account so that you can grow your assets and become your own banker and control all the assets of the banking function of your life. Does that make sense?
Yeah.
Okay, cool. All right, so then I don't have to maybe get into all this part because we all do this, but I'll just tell you what I'm doing. I literally have an in-force screenshot of my policy, my real policy. And this was taken in the beginning of the year, but I break down the difference. I break down what premiums are, right? So Grant Cardone talks about, I'm just telling you what we're doing outside of the presentation now, right? But he talks about being able to talk about the features, advantages, and benefits of what you do. But people don't buy features. Like, they don't care that there's a premium. They don't care that there's a death benefit. They might. But the benefit to that is that with your premiums with whole life can never increase, right? Because of inflation also, people are like, I have to pay my whole life. Yeah, you got to pay your whole life, right? You could do other select type of products, but the reality is because of inflation, the value of a dollar is continued going down over time. So $1,100 in the future is going to be nothing, right? If you look at what happened in the past, inflation has gone up over 300% in the last 30 years. That's on average 10% a year. The government's not telling you the whole truth, right? But the reality is, compared to a universal life policy, whether it's traditional UL, IUL, or VUL, premiums can never increase. You don't have to worry about being 60, 65, 70 years old and having the risk of your costs and your fees going up significantly. And there's major lawsuits that all the major carriers have because of this. All you got to do is Google universal life lawsuits and you will find countless pages of lawsuits because of increasing fees. And so to avoid that, you use a whole life insurance because it provides guarantees, which is totally the opposite of everything I learned before I walked into Marshall's office. All right. Next is dividends. I say this is the next feature of a life insurance policy. You will literally be receiving profit share from the life insurance companies. It's called dividends because in mutual participating companies, the policyholders are the shareholders. Universal life policies do not have any dividends. Okay, they increase cash value, but they do not have dividends. The death benefit. This is another feature of a life insurance policy. The benefit is that your family will not have to worry about anything. You're going to get death benefit tax-free, and your family can maintain their standard of living in the event of your passing away. And if you see here, the death benefit goes from 10 million to 2 million. You see how that happens? Or that's because after 15 years, when you combine term and whole life together, it allows you to put way more cash into your policy in the early years and supercharge your cash value. And so if you're utilizing this for real estate or purchasing cars or sending your kids to college, you want to do what's called a blended policy and be able to max the amount of cash that you have in the early years. And I write, nobody knows how to specially design policies like we do. This is all straight training from the Infinite Banking Practitioner program. And so it all comes down to being able to combine whole life so you can maximize the amount of cash in the policy. And then the loan balance, and I write, this is where life insurance gets sexy. Right? I don't care who I'm talking to, someone our age or a guy that has $50 million in real estate. I say the same thing to every single person. Right? And the purpose is that you don't have to go borrow money from outside banks, financiers, or lending institutions because you can become your own banker. You can borrow money from against your policy at as little as 4.85%, and any outstanding loan balance can reduce the death benefit if it's not repaid. And the best part about it is that it continues to grow dividends as if you never took any money out of it. I don't talk about direct and non-direct recognition. Don't use insurance lingo. Don't talk about PUAs and blah, 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 blah. Just talk in normal terms about what they're going to get from it. And I say, have you seen enough to be able to make a decision to look at numbers for yourself?
Yeah, let's do it.
And then I just go right to the One America illustration software.